Wonderful. Good evening, ladies and gentlemen, and a warm welcome to our Wednesday evening webinar. I know it's a little bit later than the other weeks trading, and it was a great event, and it took a little bit longer, so we had to postpone this webinar. Thanks for your understanding, and thanks for your time for this evening. I'm very glad that you spend your lifetime with me for the next around 45 minutes. I do all of my efforts to teach you something interesting news about the trend, and today we are in the fourth part of this trading education series about the main topic: how does the trend develop? So maybe you can give me a short message if you can hear me, and if you have a picture, can you see the slide? Maybe you can give me a short message, yes or no. Can you hear me? Do you have a slide? Can you see? Do you have a picture? Thanks for your message. So it seems it looks right. It looks well. Yes, Henrik, there. Thank you very much. Okay, let's start with this slide, with this topic this evening. How does the trend develop? The different trend sizes, and something, the same procedure as every week. I have to tell you the risk disclaimer. Forex and CFDs are complex instruments, you know that, and come with a high risk of losing money rapidly due to leverage. Around 38% of retail investors' accounts lose money when trading CFDs with this provider. You should consider whether you understand how CFDs work. So this presentation, the companion video, is for only information and educational purposes only. Online educational materials are developed by Admiral Markets and distributed by Admiral Markets for a global audience. And additionally, please be advised to study our kit called Key Information Documents in order to understand the nature, risk, cost, potential gains, and losses of products offered by us. So, and since August this year, we had a new regulation about the European Union. This differs between retail clients and professional clients. In this presentation, we only use slides and demo accounts. So why you have to choose Admiral Markets? Because we have the best offerings in DAX, typical spread of 0.8 points during the main trading in US euro against US dollar, 0.8 pips typical spread, and no commissions. And what's very interesting for me and very highly important is no minimum stop distances or requotes. That's very important for our trading. So, and ESMA shows us important changes for Forex and CFD trading. You can see it. And your options, you can choose between retail clients and professional clients. In case you would like to recategorize, you can apply for preference status by filling out the form in your traders room. So, and if you want to get in contact with us, use this information here. And now we want to talk about how does the trend develop, ladies and gentlemen. We talk about the different trend sizes. And so we have two under categories this evening. The trend sizes, yes, which trend is the right one for you, which is trend yours. So, and the trend correlation we want to talk about a little bit this evening. So maybe you can remember on this slide from last week, you know, we talked about how does the price develop, and now we are in the fourth topic, how does the trend develop? And maybe you were a part of this, the last one. And you know, at the beginning of every trade or of every trading, the market participants, either which kind of them, big one, small one, you and me, for example, we are, and all market participants are responsible that the price develop. The price develops based on supply and demand. And finally, at the end of them, there's a trend. And the trend is that what we are trying to trade. So we have two aims, my dears. We have two aims to fulfill. The first task you have to recognize, you have to figure out, do we have more supply or demand right now? So for your understanding, you are sitting in front of your PC and you're willing to make a trade. The most failures, the most people in trading fails because they forget to figure out where they are in the market. What is actually more in the market? Do you have more supply or do you have more demand? That's so much important, ladies and gentlemen. And this is the topic. This question, the answer of this question is responsible basically and finally for your trading success. So the first task you have to do is to figure out, do you have more supply or demands? At the end, to figure out if you are in the move or are you in the correction. This is what is behind this question, do you have more supply and demand? Are you in the move above the last point 2, you know we talked about it? Or are you in the correction zone? This is the most important thing. And the second task you have to fulfill is, do you have the same one in the future? So what can you expect when you are going inside of the market? So, you know, I told you in the last webinar, I said, it's great, you are a hero if you are in the market, but you are not a hero if you are alone in the market at that point where you went in. You need the people they see the same situation like you. You may be, you can be the hero, but if there nobody which is see the same like you, your trend or your trade will be a loser. So these two tasks are your aims, what you have to figure out before you go inside the market. Let's repeat. The first one, actually, at that moment, if you want to go on the side of the market, do you have more supply or demand? Are you in the move or are you in the correction? This is so much important and is responsible for the result of your trade. And the second one, do we have the same one, the same side, the same future, the same thing in the future? Do you find more people that want to go in the same direction like you? That's so much important. Listen to me. One of my biggest mistake in the past was that I take myself too much important. I always thought, oh, Markus is in the market. Oh, I am very important. Oh my God, I'm in the market. Now the market must react on my position. But believe me, I swear, the market doesn't care about me. Of course not. And unfortunately, for me, you are very important for me. But unfortunately, the market doesn't care about you and me. That's what we have to understand. So we have to think about the bigger market, the smart market, that is support you and me, so that support us in our trading. That's the answer about the real question, do we have the same? It means supply and demand in the future. So, and this is the reason why we are talking about the different time or the different trend sizes. So listen, the time frame is not so much important. You can see if you have enough history in by your broker in the market or in your software, you can see the big trend in the tick chart, or you can see the big trend in the minute chart if you have enough history in their chart. So maybe you can see the leading trend in the daily chart. You can see the same trend in the minute chart if you have enough history. So the time frame is not so important like a trend size. So which one is yours? Have you enough time for a small trend? So maybe you have a job, a real job. I talk about a real job, not trading. Not trading is not a real job. Not in our cases maybe. So maybe you are you have a real job. You don't have any time. You have so much time during the day to watch at the markets or at the charts. So then the small trend is not yours because you have no time to watch it. Is it the big trend? Is the big trend yours? Don't forget you have to set down or you settle down the stop. So is your pocket, is your account big enough to set the stop far away? That's the question you have to ask by yourself. So the question is, how useful is your signal in your trend in the sight or in the view of the bigger trend? Maybe you have a great signal in the hourly chart. It's great, wonderful signal. You have a move, you are in the correction. And now the next, you can see the next move will start or is going to start. But how useful is the signal if you have a look at the bigger trend above you, maybe in the daily chart? How useful is then in your signal in the hourly chart? How useful is your signal if you are in the daily chart far away in the move and you will get a signal in the hourly chart? That's a big question, because you know after every movement, the next correction will come. So how useful is your signal in the hourly chart when you can see the daily chart, you are very far in the move? It's not really useful, and that's so much important. And if you watch my my weekly market and trading approaches and on tomorrow at 11 maybe, you can see how I use it in the real charts. And there you can see my trading approach is, and the same procedures in every chart. First, I have a look at the daily chart, where I am there, and then I have a look at the hourly chart.
Signal 5
and that's the question you have to know. How useful is your signal in your time frame? So that's the slide. The first task we talked about, in which market phase you are. What is much more important right now? Where are you in the move or in the correction? Do we have more supply or more demand? So, and every trend, every movement, and every breakout, whatever you want, is depend from the bigger trend. So the decision do you want to make is, do you want to make a trend trade? Or do you want to make a movement trade? Or do you only want to make a breakout trade? You cannot make the decision without a view at the bigger trend. In which market phase you are in the move, or in the correction. And every part, and every single part of them, a trend, movement, or breakout, has its own entry, has its own stop leading, and its own characteristics. If you want to make a trend trade, movement trade, or breakout trade, that is called my trading style. Because there is a big difference between you want to make a trend trade, or you want to make a movement trade, or you want to make a breakout trade. In the future webinars, we want to talk about of that. If you a movement trader, I will show you a special approach, a special trading approach. Is called trading by reversal bars. It's a very interesting topic, because this kind of trading, this trading approach, movement trading based on reversal bars, for example, has its own entry, has its own stop, and has its own characteristics. Wow, what a difficult word. Characteristics then. And if you want to make a breakout trade, you have as well your entry, stop, and characteristics. That's called trading style. And maybe you can recognize now why our very first webinar in this trading series was the business plan. Do you remember? Maybe you was a part of it, of this completed trading series. The business plan. Do you know what do you want to trade? Are you a trend trader, movement, or breakout trader? Here we are. You can see it again. The decision is responsible, or the decision if you want to make a trend, movement, or breakout trade is depend from a bigger trend, where you are there. That's so much important. Let's make a little bit training. You can see here, we want to talk, let me, so this one. So the upper row, this one, is the bigger trend. And the lower row, here, this one is trend trading. This is movement trading, and this is only breakout. We talk about list point 2. You remember we talked about how important is the point 2 and point 3. So there's a difference if you want to make a trend trade, or only the movement, or only the breakout. And every part of this, every 3 pieces of this one, trend, movement, or breakout, is depending of the bigger trend, the trend above you. Maybe this is the hourly chart. You are a trader in the hourly chart, like me, for example. Then the upper row is showing you the situation in the daily chart. Or maybe you remember our first rule in trading: first you need a trend. So let's figure out which part of these 9 situations of the bigger trend is the best one. What do you think? Type it in the chat box. If you see this 9 situation, 1, 2, 3, 4, 5, 6, 7, 8, 9, of the 9 situations, which one is the best situation to make in the hourly chart a trend trade? Not movement, not breakout, only trend trade. In which part, number 1, number 2, number 3, is worthful enough to start a trend trade in the hourly chart? Let me help you. Number 1. Do you think number 1 is worthful enough to make a trend trade? Remember our very first rule in trading. Either you look at the signal trade, maybe the hourly chart or the higher time frame. The first rule, you need a trend. Do you have a trend in number one? No, you don't, because you have the move, you have the correction, and you have the start or the beginning of a move. But for a valid trend, you need a close below this point too. Do you have a close? No, you don't. So number one is fail, is wrong, because you don't have a trend. Without the trend, no trend, no trend. It doesn't care in the hourly chart or in the bigger trend. The first rule, you need a trend. What's about the points number two? What's about number two? Is this worthful enough to make a trend trade in the lower time frame, the lower trend? No, it's the same like number one, because you don't have a close above the point, below the point two. You don't have a trend, no trade. Please keep it in your mind, burn it in your mind. No trend, no trend. The smart money, let me tell you this fact. The smart money in trading, the real big capital, the real big money are trading in trends. They building trends, they remove trends, they rebound the trends, but they always trading in trends. So number two, maybe you can make there a breakout trade, maybe here at this point, maybe you will have there a breakout, maybe, but not for trends trading, because you don't know at that moment. If you are here, you don't know at the moment here if you have a double bottom or you will get here a trend, a continuation. You don't know it. Maybe you will get here bottom, double bottom, and the trend will make this one. So number two is wrong as well. So number three, what's number three now? Number three is a good thing, because now you know you have a trend. Yeah, I can see it. You have a trend, you have movement, you have correction. Now you have a move. This was the point number two. Now you have here correction point number three. Then you have a trend. Yes, right, we have a trend. But this is the upper trend. Do you want to make here a trend trading in the hourly chart? No, of course not, because you are in the move here. And we know after every move, the next correction will come. So to start here a trend trading in the lower time frame is stupid. It's really stupid, because you don't know if the trend is going on, or if the move is going on, or the next start or the next correction will come. You don't know it. It's a 50-50 chance, and ladies and gentlemen, 50-50 chance is too less for our trading. So number three is not our situation to make trend trading here. We want to make trend trading in the lower time frame, the lower trend, and we need a worthwhile situation in the higher time frame. What's number four? What's about number four? What can you see there? You can see a movement, a correction. You have a trend, we have a movement, and now we have the beginning of a correction.
5 minutes.
So what kind of situation do you have here now? You don't know it. You can start here a trend trading to the lower side. You cannot start here because you don't know if you will have here the rebounds or you have a continuation of the correction. You don't know it. There are no probabilities on your side. And for a very good trade, you need as much as you can probabilities on your side. And the first topic you have to figure out, the most important probability is the bigger trend on your side. So number 4, wrong as well. What's about number 5? Oh, number 5. It's the big step. Number 5 is the only right one. Why? You have the movement, you have the correction, and you have the movement. You had the correction, and now after correction, the correction is seemingly came to an end, and now a trend continuation is more likely than a trend break. And now you have the beginning of the next movement, and that's the big step. That's the jackpot in trading. This is the situation you have to watch and you have to looking for in your bigger trend. And up to now, up to this webinar, up to this day, up to this hour, the only first topic, the only first step, your only first aim is to watch and to looking for about this situation in your upper trend. Movement, correction, and the beginning of the movement. And this is the only situation to look to get inside of the market and to make trend trading in the lower chart. That's the big one. Number 5. It's the only one. What's about number 6? Number 6 is, yes, maybe the same, but a little bit too late, because maybe you can make a breakout here. Yes, that's right. But you cannot know if you will have here a double bottom and the correction is going on, or you have a trend continuation. You don't know. That's the reason why number 5 is the only one, because you have a lot of space to the points to here. And if the price comes down to this point too, you are in the winning zone already in your trend size. This is the bigger one. But here at the point 2, you cannot know if you want to start here trend trading. You don't know if you have a trend continuation or maybe a double bottom. That's the reason number 5 is the only one. Number 5 is the jackpot, not number 6. Maybe you can here make a trend a breakout, or maybe movement, but not a trend. We're talking about trend trading. So number 6, I make a question sign here. It's not really wrong, but it's not the best one. It's maybe category 2. Okay, it's a B good. So what's about number 7? Number 7 is the same like number 3. You have a trend, but you are here in the move. You cannot know if the move is going on or the next trend, the next correction will come. Number 7, it's not our situation. What's about number 8? Number 8 is wrong as well. Why? Because you have a trend break here. It was then point number 3, the last point 3 here, you have a trend break. After a trend break, you cannot know what will happen at next. So you're trendless here. So number 8 is wrong. What's about number 9? Number 9 is very difficult. Number 9 is leading you in a trap. Number 9, at the situation number 9, so many people, so many traders in my trading community as well, they have so many problems with this picture, number 9. Why? So you will say, oh, I have 2 trends. Nice, looks like really nice. I have a downtrend and I have uptrend. So which one do you want to use? Do you want to use this one? Or do you want to use this one? What do you want to use? That's the decision. That's the best decision, to make one decision to stay on the sideline. Because number 9, you cannot know which trend is more important than the other. You cannot know at that point here, you cannot know here if you will have a trend continuation of this trend, so this one, or you will have a short correction and a continuation of this short uptrend. You cannot know. That's a 50-50 chance, and that's not the jackpot. Number 5 is not ours. So you can see this big row, you can see number 5 is the only one. It's the jackpot. Number 5 is our jackpot for the upper trend. Number 6, maybe question, maybe as a breakout, but number 5, that's the jackpot. I hope you can remember it, make a screenshot, whatever, write it down. Number 5 is yours. So, and now you know about this topic, about this slide we talked about. Now you can imagine why the bigger trend is, why the bigger trend is so much important to make the right decision if you want to make a trend, a movement, or breakout trading. The bigger trend is always highly important. Only with a view, with the right view on the bigger trend, the trend which is running above yours. If you want to make trading in hourly chart, the daily chart is yours, is the bigger trend. If you want to make trades in daily chart, in day trading, like 5 minutes, the hourly chart is your bigger trend. So you have to figure out, where are you in the bigger trend? Are you in a correction, in a leading, in a trend, in a correction? Where are you there? And based on the bigger trend, you can make the decision, want you make trends trading, movement trading, or breakout. That's the reason why you have to figure out, where is my market phase? Are you in the correction or in the move? And then you can make your decision, which kind of trading style is yours. The higher time frame, the higher the time frame, the higher the volume, ladies and gentlemen. You can imagine that there's big money, the real big money with billions of dollars accounts or dollar accounts. I'm talking about the real money, not our $10,000 or $50,000 or $1,000 accounts. They are not trading in 5 minutes. Sorry, they're not trading 5 minutes. They are responsible, and they are included in the weekly chart or in the daily chart, or maybe in 4 hours. Very seldom in 60 minutes. The big money is involved in the weekly chart. And either which time frame you want to use, you need to have a look at the higher time frame. If you want to make trades in 5 minutes, you have to watch at the 60-minute chart, the hourly chart. And if you want to make your trades in 60 minutes, you have to know, and you have to look at the daily chart. That's so much important, because the higher the time frame, the higher the volume there. And you need the big money on your side. Never fight against the trend. That's the background of this topic. I don't know, where are you living? Can you type it in the chat box for me? Where are you living right now? In which country? In which town? Maybe you can. So only for me, that I can have a little bit imagination to what kind of person I'm talking about. Maybe you can type it a little short in the chat box that I can see where you are. Rijeka, Croatia, like Chicago. Oh, Czech, very great pleasure for me. Very welcome. South Africa, beginner, Cheviers, right, correct. Very welcome here. England, Chris, that's great. Thank you for your lifetime you spent with me here. So maybe let's make an example. Maybe you want to figure out where is Chicago. So, or London, maybe, Bruno, great. You have to figure out where is Chicago, or maybe London, or Salisbury, wherever, whatever. It makes no sense. You have to look at the world card or the globe. That makes no sense. If you want to figure out where is Salisbury, or where is Rijeka, or where is Chicago, you need to zoom in the map. If you want to figure out where is Chicago, it's not enough to have a look at the globe. You have to zoom inside of the map. You have to zoom as far as you find, as you can see the streets of Chicago. And that's the reason why you have to zoom inside of the time frames. But Chicago, for example, Chicago is a part of Illinois, I think. And Illinois is a part of America, the United States. And the United States are part of the one side of the globe. And it's a part of the earth. I hope you can imagine what I want to talk about you. If you want to figure out where are you in the market, it's not enough. You have to look at the 5-minute chart. If you want to figure out to which country, maybe Chicago. Where is Chicago? Is it in California? Or is it in South Carolina? Or is it in North Carolina? Or maybe in whatever? You have to zoom out to figure out in which country is Chicago. You have to figure out. And this means the same in trading. You want to figure out where are you in the higher time frame, or where are you basically in the market. You have to zoom out in the charts. It's not enough to have a look at the 5-minute chart. You need to have a look at the 60-minute chart or on the daily base. That's the reason, ladies and gentlemen. And thanks that you tell me where are you living. So it's a really great pleasure for me as a German guy to talk to you. And I hope you can understand my German English. That's the reason why I'm talking to you about the importance of the higher time frames, because you need it. You need the support of the higher time frame. So now we talked about the last one, how a trend develops, and which is the characteristics of a time frame high. We later talk about an uptrend. You can see higher highs and lower highs. This is the meaning of an uptrend, and the downtrend, lower lows and lower highs. These are the characteristics of the down and uptrend. And you can see here lower lows, or in uptrend higher lows. This means you have an uptrend. And this is when you can see the movement. And then this is number 2, the correction. And you always have a correction zone between the last point 2 and the last point 3. This is your correction zone. And you will see in the market, after a movement, the price come back to the last point 2, or maybe in the last correction zone with the highest probabilities. Very seldom the price stopped here, very seldom. In most of the cases, the price came back or come back to the point 2 or in the last correction zone. That's the best situation to make our trends. That's the characteristics of an uptrend and the same one of a downtrend. And the trend is like calling you throw down a ball to the trap. to the step, sorry, to the step. And it doesn't matter how long does the ball is keeping on this step. A trend continuation is more likely than a trend break. Always and always and always. You can see it here and here and here. Look at this one. Maybe you have a large step. Maybe you have a deep step. Maybe you have a short step or a large step. You can see here. Maybe you have a large movement. Maybe you have a large step or a short step. But there's one fact. A trend continuation is more likely than a trend break. That's the reason why we are talking about truth in the market, or trust, not truth, or trust in the market. Trust the trend. Trust the trend. So you can see, maybe this is a short view at the DAX, for example, and what you can see here, you can see the trend. Look at this one. Movement, correction, movement, correction, movement, correction, movement, correction. You can see it's a trend. It's great. It's only a trend, no more, no less. So where you want to go inside of the market? Of course, here. When you have here a trend, here the correction has stopped, and here we want to go inside of the market. Here, is that the bigger time frame, maybe the daily chart, for example? Then you can make here your trend trading in hourly chart. Outcoming of the correction, outcoming of the correction. Not here, not here, only in the correction. There you can make your trend trading. You can see it in every chart. To define a trend, ladies and gentlemen, doesn't mean to trade them, because this is the bigger time frame. And you have to make your trades in here. That's your position here. Outcoming of the bigger time frame or trend, there you have to make your trends. This is the daily chart, for example, and you want to make your trades in the hourly chart. So to define that trend doesn't mean that you trade this one. This is too large because maybe your account is not big enough. Because if you want to make the trend in the daily chart, it means you have to make your stop below, above this 0.3. Maybe your account is not big enough for that. So you have to make the decision to make the trend in the lower chart. So prepare your trading. Where are you? Are you in the move or are you in a correction? So this is the question of time frames. Is it a question of time frames? No, because with enough history, you can see in every time frame the bigger trend. If you have enough history, you can see the daily chart in the minute chart with enough history. That's the reason why we are talking about trends. We don't talk about time frames. So time frame is a little bit easier to recognize the right trend. But basically, time frames are not responsible for the trend. Time frames are making by the software. But in the bookmap we talked about, in the bookmap you cannot see a time frame. You cannot see a trend line. You cannot see pivot points or Fibonacci or whatever you think about. Only prices. So figure out, if you want to make hourly chart, where are you in the bigger time frame? Are you in the correction here, or are you in the move? Where are you? To make a decision, do you want to make trend trading? You have to figure out in the daily chart, for example, it's only an example, in the higher time frame or in the higher trend, where are you? Are you in the correction? Or are you in the starting of the beginning? Or are you in the move? Figure it out first before you make your trade. Believe me, I'm inside of, I have 18 hours, 18 hours is a little bit less. I have 18 years experience in the market, and I made so many mistakes, believe me. I lost so much money in the market. I can tell you about my experience. Figure out, before you make a trade, where are you in the market? Zoom into the time frames to figure it out. It's not enough. It's not enough just to have your signal in 5 minutes. As long as you don't leave. As long as you don't know where are you in your higher time frame, it makes no sense to use a signal in 5 minutes. Your 60-minute chart is so much important. And if you make trades in 60 minutes, your daily chart, the higher time frame in daily chart is so much important. It's a part of your trading. It's a part of your trading. Figure out, prepare your trading day. Zoom into the time frames, zoom into your trend. Movement or correction by different time frames. So look at this slide. You want to make trend trading, you have to figure out where are you here in the higher time frame. Are you here in the correction zone, or are you here in the move? So where it makes more sense to make trend trading in a short trend, here or maybe here? Of course here, because you have here the trend continuation. This is a correction. Maybe you can make here a little bit long trades, but makes no sense because it's basically an uptrend. That's the reason why you have to figure out where are you in the market. That's the most important topic. So what kind of trade or which trend size you want to trade? So what's useful when I want to make a long trend, or only a move, or only a breakout? And are there different signals in other time frames? What's that? Where's the bus? What does it mean? Where's the bus? I told you a couple of minutes before. Maybe you are a hero if you are in the market. But if there don't come more people, more traders, more money to support your trading idea, I promise you, you will be the loser in the market. That means this sentence, when I say, where is the bus? Where is the bus with the people that want to make the same trade like you? This means the question, where is the bus? Where is the bus with the people who want to make the same, which want to make the same trades or the same direction like you? And that's the reason why you have to figure out, are you in the movement or in a correction in the higher time frame? Because you need more people that want to support your trading idea. And only the higher time frame is responsible for that people, for that traders. It's not enough if you have a signal in 5 minutes when you are far in the move in the hourly chart. And only with a view at the higher time frame or in the upper trend, you can decide if you want to make a long trend trade or only a move or a short breakout. Only with the view at the higher time frame. What's the result for your trading? What does it mean? You have to figure out, is the market in the move or in the correction? Look at this one. At this point, you have the view. You think, oh, great. Oh, sorry. Great. Where is it? Oh, great. There's an uptrend, a downtrend. Great. I can go short here. Maybe this is the hourly chart. Of course, you are here. You are the wanderer. You are the trader. And you can see, oh, great. It's very easy. I can make a short trend. It's a short way. But you cannot know at this point, where are you in the market? To figure out where are you in the market, you have to zoom out. Like I talked about, if you want to know where is Chicago, it makes no sense if you are standing in the streets of Chicago. You have to zoom out to know or to figure out where is Chicago. Is it in USA or is it in Germany or is it in South Africa, and where you are. It makes no sense to standing in the streets of Chicago. You cannot figure it out there. You have to zoom out. That's the same reason here. Look, and now this is another view. Here are you thinking, oh, it's a great downtrend. Here can I make my downtrend? No, you cannot, because this little bit down is a part of a big uptrend. And this is only the correction. And if you want to make trend trading, you need a view at the big chart. On the other side, look on the other side. Here you can make your down trade, because it's basically a downtrend in the higher time frame. These two pictures are the most important pictures in this webinar. Figure out, where are you in the market, ladies and gentlemen. And to figure out where are you in the market, you have to look back. It's not enough to see this one. This was one of my biggest mistakes in the past. Oh, we're short, 3 short candles. Oh, damn, I have to get short. No. You have to view if you have a valid downtrend. Yes, here you can make short trades. Yes, here you can make it. But to figure out, it's not enough to look at the current candles. You have to figure out, where are you in the market, basically. Look at this one. On the left side, 3 down candles. It's not enough. You have a valid uptrend. Here are you in the correction. Here it makes no sense to make a down trade, because it's only the correction. You cannot know how far will the correction go. Maybe stopped here and you can see the next movement. Not down trade here. There's 3 candles. What do you have here? Nothing, a broken uptrend. Here was the break. Let me see, let me show you. Here was the break. You have a broken uptrend. You are in the move. It's forbidden to make here a short trade, because you don't have a valid trend. What's here? You can see that you have 3 short candles. Do you make a short trade here? No, of course not, because you are trendless. You have a movement, you have a correction, you don't know what will happen here. Maybe a trend continuation, but maybe this one. You cannot know. So no short trade here. You can see your 3 red candles, and you are here. It makes no sense to go short there, because you are in the move here. here were the right position, here were the right position, but not here, not here, and not here. So much important. Not here, you can see it. You are in the move and in the beginning of the correction, but you cannot make a down trade here because you cannot know if the correction will comes to an end here, or maybe it will go more down. You cannot know. It's a 50-50 chance, and we cannot make money with 50-50 chance. Then you can go to Las Vegas in casino. So what does it mean for your trading? What means the current picture in the higher time frame? Are we in the move or in a correction? I know, or I hope you understand what I want to talking to you. How important is the bigger time frame? And here you can see and you can figure out with that how much important is the bigger trend. So that's my proposal for you after this webinar. Before you make a trend, before you make a trade, figure out where are you in the market. Have a watch, have a look, have a big view at the higher time frame. Thanks a lot for your attention. Thanks a lot for your time, for your lifetime. I hope I was able to teach you something for your own trading. And next week, we talk about a special trading approach, the DowHowFiboPro Setup. Thanks. I wish you a nice evening or a nice day, wherever you are. Enjoy the rest of your day. Thanks for your time. Take care. And I hope we will see us on maybe tomorrow or next week on Wednesday. And I wish you a lot of success. Thanks for your time. Bye-bye and take care.